Oh man, why can't I remember? Okay.
There we go. I think we've officially got the doors open. Hopefully everybody's doing great this evening. I know that we're getting some snow here in Saskatoon. Hopefully that doesn't last. I know we're getting to the end of January, and hopefully the weather's gonna start getting a little nicer here, everybody. So thank you so much for joining us on a snowy January night.
Yeah, welcome everybody. We have a solid group today. This is going to be a busy one. We got a lot of info. So, that being started, we said we're going to start at 7. Everybody's filing in here, so let's get this chat fired up, make sure that's working because this thing's going to be super important for everybody. Can everybody just, if you can hear us, see us, let us know in the chat, make sure everything's working good on this end. This is going to be a very important part of it as we go through here. Perfect. Thank you.
Thank
Thank
you,
you.
MD.
Awesome. Okay, so we got, like I said, we got a big group here. We're filing in here. A bit of housekeeping before we get really into this. Number one, this chat is going to be very, very important. This is where you ask as many questions as you can. We have a lot of information coming at you guys in the next hour and a bit here, like a lot. So there's not going to be a lot of time to pause in between things. So ask as much as you can in here. Either Ryan or myself is going to be on here monitoring it at each time. If we don't get to all of them, there is going to be a session at the very end of this. You can stick around. We'll answer everything we can and more. Second thing is, again, this is recorded. So if you have to leave or you need recapping of any of this, this is recorded. You'll get a recording of this. It'll be sent out either tomorrow or Friday before the weekend. But if you don't see it by the weekend, check your spam folders or reach out to me. It's also going to be up on my YouTube page as well, but reach out to me if you don't see it just to recap all this. But yeah, but again, like Ryan said, thank you for coming. It's starting to snow out there. We got a big group tonight. I'm looking forward to it, but there is going to be a lot of information coming at you. So yeah, I think we're good here. We're going to get rolling into it. So when you guys did sign up for this, you got the message that said you're going to get a copy of this book, which is true. This is my complete guide to buying a home book. Developed this a couple of years ago. It's chock full of good stuff when it comes to buying your home, some good tips and things like that. This plus a condensed buyer's guide of all of this will be coming at you in an email with the recording of this all in one shot. So it's just gonna be one email with the book, the buyer's guide, and the recording. So look for that. Again, maybe check your spam folders if you don't see it by Friday, but it will be coming at you before the weekend. So again, thank you guys for showing up for that. So, speaking of the chat box, I'm going to get this fired up another time. Buying your first home. Again, lots of stuff that goes into buying your first home. For the most of us, it's going to be your most expensive purchase, but it's a solid investment as long as we do it right. And that's why we put this on for you. Now, in the chat, let me know, what are your guys' feelings of buying your first home? I want to know to see how Ryan and I can make this better for you. If you're feeling any of these things, it's fine. Just curious. I know there's a lot of information out there. It could be mind-blowing, but it'd just be interesting to see because I know when I bought my first home, we didn't have anything like this. I was going in blind. It was so an okay experience, but I wish we had this. So if you guys are feeling a little intimidated about the market, it's fine, right? Yeah, absolutely. It's confusing out there. It's I guess the word I like to use lately is it's pretty chaotic. Really, it is. Limited market, limited inventory, lots of buyers, and a lot of people are hearing a lot of things in the media, right? And a lot of things on social media, and a lot of people things from friends, right? Yeah, it's a lot, yeah, and it's lots of information, right? So what we're gonna do here, what our goal with this webinar is, I mean, I'm gonna fill your heads with a lot of info. Trust me, it's gonna be a lot. But what we're going to tell you and show you is how to get into the market to start with. Everything else, the buying process, the offers, the contracts, everything real estate related and mortgage related. Ryan and I, our jobs are to literally hold your hands through the process and show you and find you the right place, the right investments. Um, yeah, and find something that you can afford. That's a good point right now with the house prices, but we can start building on this equity in these homes and help you guys out. So this is the goal for it. This is what we're here for. Um, so yeah, like I said, ask a lot of questions. Hopefully by the end of this, we kind of give you a good idea of what we need to do and how to help. Okay. So before we get into it again, um, I want to introduce ourselves just so you know who's talking to you for one thing and that we're qualified to be doing this, and just to get a good feel of who we are. Okay. So first and foremost, I am Andy Goddard. I'm a realtor with eXp Realty. I've been doing this for over 4 years now in the Saskatoon area. Helped many first-time buyers, many new to Canada or people that are new to Canada. Um, First-time buyers from anywhere, whether it's from mom and dad's basement, mom and dad are pushing them out, right? Renting all the time. I've helped many of them, right? And I'm born and raised in Saskatchewan. I grew up in a small farming community on the Alberta border. But I moved to Warman in 2016. That's where me and my wife got married. We had our son, we had our daughter. We have a third one on the way. So I love calling this place home. This is where I call home. I'm happy to help everybody else find this, uh, call this place home myself. And so I'm going to put in here really quickly. This is a link. This goes to all my social media. So if you want to follow along for real estate tips, market updates, funny videos every now and then, you can find everything about me on there. I don't hide anything. That's exactly who I am. The other thing I'm going to put in here before I pass it off to my partner is you're going to see this booking link popping up a lot. So this booking link, what it is if you have any questions, want to move forward with something, want to know more about your situation, book that call with us. It's a one-on-one conversation at a time that works for everybody. We'll have a personal conversation and see how we can help you. So I'm going to keep putting that in the chat, but make sure to utilize it. It's going to be great to have a one-on-one conversation. So again, when I say partner, when it comes to real estate, majority of first-time home buyers do not have the full cash to buy a house. So they need mortgage financing, right? I, as a realtor, can't do my job well without a right partner to help with the financing. I have met Ryan. Ryan and I have been doing this for, I think we just talked over 2 years now, doing these webinars with each other. We've helped many first-time buyers just from this alone, plus many others. So we've had a solid team going here, and I haven't found anybody better in the business. So I'm going to let Ryan introduce himself.
Good evening, everybody. Thank you so much for that absolutely wonderful introduction, Andy. Yeah, as Andy mentioned, we've been running these webinars for over 2 years, and we've had some great success helping friends, family, and many people that have come new to the country, great first-time home buyers. We've helped a lot of people over the years really go through the process of not only the mortgage side, but the real estate side as well, helping people get pre-approved, understanding the concepts, and really guiding them and walking them all the way through the process from start to finish. So know that we are here to help, we're here to guide, but we're really here to walk hand in hand with you all the way through to make sure that some things you may not even realize are part of the process. We're here to make sure that you not only understand everything that's going on all the way through it, but explain the best options that you and your family are going to go through, and explain all the situations and decisions, and the best ways to go about making those decisions. So my name is Ryan. I've been working with the mortgage group in Saskatchewan, been part of the mortgage landscape here in Saskatchewan for about 22 years, over 22 years now. So I've been doing this a long time. I am born and raised in Saskatoon. So but just to let you know, just because we are directly in Saskatoon, Andy's in Warman, that we are licensed all the way through Saskatchewan, so we can help you. If it is something in Saskatoon or directly around, but we can also help people all over the province. So if you happen to be in PA or Regina or Swift Current or anywhere in between, know that we can help. Navigate the processes all the way through. We have some great processes that we can help you to speak remotely. If you want to do stuff over the phone, we can take documents through document systems and through email as well. So you don't have to be directly in Saskatoon to use us. We can help people all over the province. So know that we're here to help you out. I'm a family man. I've been married for almost 30 years. As of this summer, I've got two wonderful boys, Jordan and Austin, and two wonderful cats, that we have. So I am a family guy. We're here to help you and your family all the way through. We heard some great feedback on what people think, anxious, lack of information, intimidated. Know that these are very common feelings, right? This is, as Andy mentioned, this is one of the biggest purchases of your life. It's the biggest asset you're ever going to own. It's likely the biggest debt that you're going to take on with your mortgage. And really, such a lack of information is out there. We're here to really kind of pull back the curtain and shed light all over that information, answer any questions that you do have, and provide help and guidance all the way through the process. So, number one, getting us working as your designated team to help you all the way through the process. That's the first step. We will take it from there. We'll guide you. We will explain. We will get you set up. We'll get the pre-approvals done. We'll find that perfect property for you, and we'll make sure that we have that mortgage closed in time. So that's me. I've been doing this a long time. I love working with Andy. Our partnership is very in sync. We literally talk every single day, going back and forth, making sure that we set stuff up perfectly for our clients going forward. So I'm going to turn it back over to Andy to get things started. And a couple of things. Andy's going to be putting in the booking link. I think he did already in there. That every situation is really unique to each different kind of borrower. So as much as the information here is going to be maybe a little more high level, we really recommend reaching out, speaking to us one-on-one, and having those direct specific conversations around you and your family situation to get that moving forward. So click that booking link. It'll get you that one-on-one time with us, and we're excited to kind of help you and walk through that. And as number two, always use that chat function. There's some great questions coming through. Keep those coming. For the most part, I'm going to be kind of working in the background for a lot of the webinar tonight, answering those questions directly. What I typically find is if you've got a question, there's 10 other people that have that same question. So please have the courage to ask those questions. We'll get them answered as quickly as we can on that chat box, and we will have some time at the end of the webinar to finish those up as well. I'll flip it back over to you, Andy, to get this thing rolling.
Awesome. Thank you. All right, everybody. That's who's on here. We got a real estate specialist. We got a mortgage specialist. The two main things you need when buying a house in Saskatoon. And then we've got a whole list of people to help with the process after the fact. So speaking of which, this slide alone here is the whole steps to what it takes to buy a home, what goes through it. And again, I could probably spend hours just on this slide alone, but I'm going to do it in a really fast version just to give you an idea of what it looks like here. So whenever somebody asks me, what do we do? How do we start? Where do we start? And I always say to learn everything you can. Then I decided, you know what? Instead of telling them to learn everything you can, we're going to teach them everything that we can. So this is a good step. Coming here, learning what you can, right? Just to get a start, where to start, how to get started. So the very most important thing, especially in this limited market, is a pre-approval with a mortgage broker like Ryan. Okay. The reason why a pre-approval is so important is number one, it lets us know how much can you shop for? What's your range of affordability? Because there's nothing worse than getting in your head that, oh, I want this $500,000 or $600,000 house, this and this and that, and then finding out after that, you're approved for 400 or 450. To go from 5 or 6 down to 4 or 450 is a drastic change of a house. So we want to kind of eliminate that and just shop within the right range at the start to get your mind in the right stage. The second thing that's very important about it is when it comes to limited inventory, you need somebody who's going to write competitive offers for you. And the way we can have a competitive offer, especially if we're not buying with cash, is having a pre-approval. That's about as good as we can get. And it's very important. That way, when we write an offer and the agent asks me, are your buyers pre-approved? I say yes. That's a very good shot right there. If I say no, not yet, they're not even going to listen to us. They're going to go to the next person. Okay. Very important. And we're going to touch on how to get mortgage approval for everybody around here. Okay. So once we have the pre-approval, this is where the actual process of buying a house starts. I come back in here. We talk about what kind of property that's going to fit you and your lifestyle, whether it's a condo, townhouse, detached house, rental suite in a basement, whatever it's going to work for you and your family, we're going to look for it in that range that we have approval for. Once we find one after touring some homes, we write up an offer. Now, I can't talk about writing up offers in this webinar because there's simply not enough time for that either. But know that when you write an offer using us, I walk you through every single line of every offer to know what you're signing, what's included, and all the things that protects you as a buyer when buying a house. I negotiate the price where we can and whenever we can. It's a little tougher with this low inventory market, but if I have an opportunity to get you a better price, 100%, that's what I'm going to do. So if we get an accepted offer on the place you want, this is a chance for us to do more digging on the house to make sure it's a sound investment. Okay, so a big thing that we usually do is for any property you buy as a home inspection. Such a major factor in it, tells us everything about the house, gives us time to review any condo documents that if you're buying a condo, we can review any other inspections that we need to have for the house, and gives Ryan and time to finalize the financing. Okay, that's all what's going on in the condition periods. Once everything's satisfied by you, the buyer, we remove conditions. You go to a lawyer, you sign the documents, they transfer the title into your name. I go get the keys. I meet you at your place. We do a thorough walkthrough, make sure everything is okay, and you're now a proud homeowner. Now, again, lots of steps to it, way more stuff that's involved with it. I don't have a lot of time for it, but trust me, every step of this, you have somebody that's going to walk you through every single portion of it, okay? So don't worry about that, but that's essentially the steps to it. If you guys want to know more, I see there's lots of questions. I love it. You want to know more about it, like I said, book that call with us. We're happy to walk you through more steps, okay? But now, we're going to get on to the fun part. This is how to get a pre-approval. Now, I see that. I just seen it popped up right there. Absolutely, I have recommendations for literally any service out there. Trust me, I've had people buy new builds after we do the home inspection and they sign and they have the house. They ask me for people to develop their basement, electricians, plumbers, carpenters, finishers, anything you can think of. We have contacts for people we've personally used or have recommended to us from other people. So yes, lots of recommended, but especially a home inspector. And the home inspector I use is amazing for first-time buyers. He explains everything and he doesn't make it scary. He makes it very informative, but I'll talk about that a little bit later. But okay, you'll see that I've got this listed as mistakes, okay? Now, this was an old way of doing things. People used to go shopping around, then they would get the approval and then they'd go buy the place. We don't have time to do that now. It's just too fast-paced of a market, so we just want to eliminate that. And let's just get a pre-approval right off the bat, okay? Like I mentioned, why it's so important, we need to have this. So, what goes into mortgage approval? Now, I want to make a disclaimer here. I know he's gonna agree with this. This isn't a one-size-fits-all thing, okay? This is just a general outline of what they typically look for, okay? Now, every single person in this room and every single buyer out there has a different circumstance than everybody else, okay? Different jobs, different credit, different debt, different down payments. So just because maybe some of this may not seem to fit with you, don't worry, give us a call. Either A, we'll get it sorted out and get you an approval, or B, if it's a no right off the bat, if it's a not, it's usually not a no, it's a not yet, okay? We'll guide you on how to get there as quick as possible. If it's as easy as just building up a little bit of credit, maybe paying off something over here, right? We're here to help with that too. We're not just going to say no, see you later. It's going to be give us a minute, let's figure this out. Okay? So just work with me on the basic guidelines, especially people that are new to Canada. There is a new to Canada slide portion down below that Ryan's going to talk on. So there adds more to this as well. Okay? So just bear with me here. So anyways, 3 things need to make a mortgage approval. Okay? Credit, income, and down payment. You have to have these 3 things correct and in place in order for it to work. If one of them isn't proper, then it doesn't work, okay? So I'm going to kind of just open this up a little bit. So for credit, when you're borrowing any money in Canada, lenders who lend the money out need to know, how are you with credit? What's your credit score? Do you have a bunch of debt? If you have any debt or loans, how are you at paying them off? Do you pay them off on time? Do you let them get out of control? Do you have creditors calling you? Do you have debt consolidation? Do you have a bankruptcy? Right? They need to know these things because if they're going to lend you a substantial amount of money, they want to make sure you're going to pay it back, right? So they're going to look at number one, credit score. Somebody asked earlier, what is the typical credit score? So anywhere from 620 to 650 is a start. Okay, everything above that is perfect. Anything below that gets a little tougher, but we have ways to help you build your credit fairly quickly. So again, here to help with that. So those are the things they look for. They want to know if you have any credit cards. Are they maxed out? Do you have multiple maxed out ones? They need to know how you are with loaned money. Okay. Then they're going to look at your income. That's a huge one too, because they need to know, A, how much do you make? How much can you pay us back? Right? So things that come with income. Typically, they want to see 2 years worth of income tax statements. Okay, that's because it gives them 2 years of a baseline of your income. Now, I know there's lots of new to Canada people. They don't have 2 years. Again, we've got ways of helping you out, but a couple of disclaimers when it comes to income. Basically, what the lenders want to see is how many hours do you work in a week? How much do you get paid for those hours? We need to know that you're guaranteed some hours. Okay, like I said, guaranteed hours. So if you're working a full-time job, pays you 40 hours a week at 25 an hour, we need to know that because, okay, you're going to be guaranteed working 40 hours at $25 an hour. That's what we can work with, right? If you have a salary position, even better because they say you make X amount of dollars per month or per year, they can use that and just max or match those with pay stubs. Okay. Lots of things. The things they cannot use right away. Okay. This is very important. If you're working a commission-based job, like selling cars, selling real estate, mortgage broker, right? Or things like skip the dishes, Uber, DoorDash, jobs that you are basically making your own hours and you don't really have guaranteed hours or pay, they cannot use that right away because there's no guarantee of what you're going to make month to month. So in order to use those incomes, you have to have tax returns for 2 full years. Okay. So just keep that in mind. If you're looking to get a home sooner than later, you need to have that guaranteed income. Okay. So your income, if you have a spouse or somebody you're buying a home with has an income, if you have children, you can use child tax benefits as extra income. If you buy a property with rental suite in the basement, you can use the rental income. So lots of different things, okay? But those are the important things when it comes to income. And then, of course, the last one, which is always a big one, is the down payment, okay? So with the down payment, it's minimum 5% of the purchase price needed for the down payment. So this also affects how much you can get an approval for. So if your credit is solid, your income is amazing, and you can be approved for, let's say, up to $500,000, but your down payment is sitting at $20,000, then you're only going to be approved for $400,000 because $20,000 is 5% of $400,000. So it does affect how much you can be approved for as well. So that's why these things all have to work together. Okay. So again, those are the three things. We can work with a lot of people with a lot of different circumstances. Okay. So then the last little bit on the down payment. I know I've had people ask if there's programs or different things that can help. And unfortunately, there's not a lot of programs. There is one, which I'm going to touch on. So for down payment, there's 3 to 4 ways to get into down payment here for this. Number one, your pretty standard one, which is your own savings. Pretty common. Save it up. Anybody new to Canada, if you have money from wherever you're from across seas or anything like that, and you want to use that as down payment, bring it over to Canada, get it into a bank account, let it sit for 90 full days. You have to have it here for 90 days. So if you don't have it over here yet, please get it over here as quick as you can so they're not delaying by waiting 90 days. But Ryan's going to touch more on that. Number two, this is where it's the first time home buyer program. So if you have RRSPs, per person that's buying a house can withdraw up to $35,000 worth to use as a down payment. Okay, so if you have two people, that's $70,000 you could essentially take out. Okay, so a couple things with that. Number one, talk to whoever you have your RRSPs through. Make sure you can use this that way. Make sure they know you're doing that, and then they'll explain how it needs to be paid back. Because I think it's within the first 2 years of using it, you got to start paying it back, and there's a certain amount of money that has to be paid back in a year. So just make sure you're aware of that, but that's an option as well. The third option is what we call the bank of mom and dad. Now, you can use a down payment as a gifted down payment from an immediate family member. So mom, dad, grandparents, brother, sister, right? Those are immediate. Anything outside of that gets a little too much. Okay, so it has to be immediate, but they can gift you the down payment. And then I said there's 3 to 4 ways. The fourth way is more inclusive. Okay, if anybody on here is part of the Métis Society of Saskatchewan, the Métis has a first-time home buyer grant. They give you up to $15,000 and a bit of closing costs that they cover. Okay, you just have to reach out to them. If you don't know, reach out to me. I've got some great info on it, who to call. They can set you up, and then Ryan can just use that as long with the rest of the approval process. Okay. Okay, so I see there's a lot of questions. Ryan's crushing it out here. I'm just going to keep hitting that booking link. If you want to know more about this, and we're going to talk more about it, but just that's the general outline of it. Okay. But the nice thing about pre-approvals is they're underwritten, which means they're going to review your income, they're going to review your credit, they're going to review where you got your down payment from. But the beautiful, beautiful thing about it is they're reliable and it tells us how much you can shop up to. Okay. And it allows us to have that pre-approval in our pocket. So when we write an offer, we can say, yes, they have essentially the funds to do this. Okay. So that's why this is important. One thing that's come up with co-signers, when people are buying their first house, maybe they can't get approved on their own. So we bring in a co-signer. So that could be again, mom, dad, brother, sister, um, and grandma and grandpa. Okay. An immediate family member can co-sign for you as long as they are a permanent resident, Canadian citizen, they have income to support it, they can be approved with you, right? The only thing is there is a risk to it for the co-signer. So they're signing on to saying that you're going to pay it. If you don't pay the mortgage, they're going to come after them. So there is a risk to them having to cover your payments. They're committed to being a co-signer for as long as you can't be approved, but once you can be approved, you can get them off the title of your home, but there are extra costs to doing that. Okay, getting a co-signer to buy the house, there's no extra cost. Getting them off your title is where the extra costs come in, and it can be about $700 to $800 from a lawyer to do that. So some people choose to just wait till they sell the house. Once the house is sold, everybody's off the title. You can go buy your next house on your own, and you don't have to spend more on lawyer fees. But if you want them off because you don't want them dealing with it, then then you can just buy them out with using a lawyer. So I seen that question come up, broker versus bank. That is coming up shortly. Very, very good question. No, I like that. The difference between a mortgage broker and a bank, oh, that's going to be a good one. Anyways, before we get to that, Ryan, I'm going to pass this off to you. This is the new mortgage update that kind of came out end of last year. So December 15th, we had some new mortgage rules that came up to help first-time buyers. And I'm going to let Ryan kind of discuss this. He's also got a new to Canada program that's after this. So he's going to kind of run things for a little bit here. So I'll pass it off.
That sounds perfect, Andy. Yeah, we're definitely getting some great questions, and some of them are centering around that new to Canada program. So this is very going to be very topical for you. But I just wanted to touch on a couple of updates that have happened. These actually happened in right at the end of 2024. Typically, with any down payment that is under 20%, it does fall into requiring CMHC insurance. CMHC is the national insurer that banks use to cover the risk of any down payments underneath 20%. So we do have to follow rules by CMHC for any down payment that's under 20%. They did have a maximum amortization, which is the total length of the mortgage all the way through to pay it off right down to zero. So amortization means total lifespan of the mortgage. We used to have a maximum amortization of 25 years that we could get insured mortgages, CMHC insured mortgages here in Canada. Now, what they have come out with is a couple of changes to that program. So it used to be that everybody had to play underneath that 25-year maximum. We now have a couple of changes that have come at the end of 2024. We can get up to 30-year amortizations if you do need it. Sometimes people love to stick at that 25 to keep their amortization shorter and pay it off quicker. But maybe your ratios, your qualification ability is a little tight, and we do need to spread that amortization out a little bit to give you a little bit of a lower payment. So we do have some options for you to do that if you are a first-time home buyer or if you are buying a newly constructed, a brand new home. Okay, so anybody that new to Canada, Canadian citizen, PR, work permit, anybody buying a newly constructed home can get a 30-year amortization, whether you are a first-time home buyer or not. And anybody that is a first-time home buyer. And what is the definition of a first-time home buyer? Anybody who has themselves or their spouse has not owned a home in the last 4 years in Canada. Okay, so that is the definition of a first-time home buyer. And anybody that is a first-time home buyer can also get that 30-year amortization spread out should they choose. There's a slight premium adjustment to the CMHC insurance by 0.2%, but it is an option. So sometimes it helps people that are really, really tight with their qualifications, maybe up that maximum purchase price just that slight bit to get into a home that maybe has a little bit higher price point than you initially qualified for at a 25-year am. So know that 30-year amortization is an option if you are a first-time home buyer or if you're buying a newly constructed home. So moving on, yeah, the New to Canada program is a great program. Really, this is something that in Canada we have a great immigration policy. We really have a fairly open door policy here in Canada. Some of you may have come into Canada underneath that immigration policy. One of the biggest segments of the first-time homebuyer market that we do have in Canada is that immigration policy, and really our government realizes that this bringing people into Canada is a huge driver of the Canadian economy. So, we really want to make sure that we're continuing to foster that. We typically see about 1.5 million new immigrants coming into Canada each year, and that has kind of grown steadily over the last 10 years. So, what we're kind of looking for there is, of course, if you are coming into Canada fairly newly, usually in the last 5 years, you may not have credit established in Canada, if at all, and you're likely going to be fairly new to your job. Those are kind of the two big concerns with anybody moving to the country. You're probably starting a new job, and you probably don't have a lot of credit set up. Our government realizes this. So, what they had developed is this program called a New to Canada program that specifically tailors mortgages for our new to Canada friends to give them opportunities sooner to get into housing so they don't have to establish these long credit histories or be at their jobs for many years. They realize they're going to be fairly short, and they've given us, pardon me, they've given us options to find credit and establish strong employment checks in a slightly different way. So the program is called the New to Canada program. There's a couple of things. We'll really cover the three pillars that Andy mentioned: the income, the down payment, and the credit side, and how they fit specifically into that New to Canada program. So as I mentioned, the New to Canada typical borrower is going to be somebody that's immigrated into Canada in the last 5 years. They set 5 years because really after you've been in Canada for 5 years, you're likely going to have credit set up. You've been at your job a long time. You're essentially going to fit under a normal program. You're essentially going to fit under a standard program. This is for somebody that might have that newer credit or newer employment. So the applicant also a couple of things they to get into this program, they do have to either be a Canadian citizen, so an immigrant probably won't have that citizenship quite yet. They can either be on a permanent residency program. Lots of our new immigrants coming in have that set up, or on a work permit. So if you're coming into Canada on that PR, that permanent residency status, or if you have a work permit, the big thing on the work permit, it has to be valid for at least another 183 days going forward. So know that there has to be some time left on that work permit or that permanent residency status to qualify under the New to Canada program. The one caveat on that I will mention is anybody that is here on a student visa, unfortunately, that program does not apply. So PR status or valid work program with 183 days left on it are the qualifications for the program. The big thing, we'll start off with the income side. Typically, when looking at income and employment for a new to Canada borrower, their income is looked at very much like any other borrower in Canada, except they do want to see that we do have a full-time employment for at least 3 months. So they do want to see that you've established a job. You're typically past that probationary period for the 3 months, and really that's it. So it's this is for somebody that would be working for another company, not self-employment. They're working for another company. They do have a structured full-time job with guaranteed hours at a guaranteed wage for a minimum of 3 months. Okay. The exception to that would be if you are transferred to Canada in a corporate relocation program and are essentially working for exactly the same employer, just maybe at a Canadian office instead of maybe an American one or something overseas or something in the UK. That would be the exception to the 3 month rule because essentially you're still working for the same program. So 3 months full time permanent job is really the minimum. So really anybody coming in can establish that income quite quickly. One key highlight here that I do want to mention is that you do have to pay taxes, income taxes in Canada to qualify for the program. So, if you do have income from overseas that you don't pay Canadian taxes on, unfortunately, those incomes don't work. We do have to have you working in Canada paying Canadian income tax. So you do have to have that employment insurance, that CPP, and your income tax is deducted at the source for that to qualify. It does have to be a Canadian deductions on there. One thing we do get asked a lot, and I will clarify this, especially with the new to Canada clients. Somebody says to us, "You know what, Ryan? I'm here. I'm in Canada, but my spouse still is overseas, and he's still working overseas. Can I use their income to help me qualify for the mortgage?" And unfortunately, as I mentioned, that income does have to all be derived, in Canada with income taxes taken off in Canadian funds. So, unfortunately, any income generated overseas is not usable unless there is a 2 year track record of doing that and having that 2 year track record being claimed on your Canadian income taxes. So, even overseas incomes can be used as long as you claim it for 2 years on your Canadian taxes. Just to let you know that that's pretty rare. Most times when a spouse is still living overseas, they are not claiming taxes in Canada. So that is a requirement of that to be able to use any overseas income. We just wanted to clarify that a little bit. Okay. Now, the other would be, I talked about structured income. If you're on a structured guaranteed amount of hours and a guaranteed wage, that works very, very well. We would just use that guaranteed hours at the wage, times that by 52 weeks, and away you go. The other options would be, if you're on maybe an expiring contract, a temporary contract, or for applicants that are self-employed and generating their income through their own business, that income would fluctuate up and down depending on how the business did. Or if you're on any sort of an income that generates commission or something that's not on a structured salary, we can do these incomes. We do need a little stability to be able to do this. What the program typically asks for, if you do have any fluctuating income or self-employment or anything like that, that there is a 2 year history of that income to show stability and longevity of that income to basically guarantee that there is some strength and stability to that income going forward. The lender wants to make sure that you can handle that mortgage payment for the long term, typically the 25-year lifespan of that mortgage going forward. So that's really how the income piece is checked on the new to Canada program. Now, pillar number two is typically the credit side. Now, again, I'll cover this, realizing that most people coming new into Canada don't have Canadian credit. The program realizes that, the government realizes that. So, what they've given us is a few options to show credit a little differently than a normal borrower through the credit bureau would have to go through. Okay. Now, what we do, the lender still wants to make sure that you're a good credit risk. They don't just take your word for it to say, you know what, John's been new to the country. for 3 months. We're just going to give them a mortgage. Doesn't quite work that way. We always want to make sure that there is some credit check that we can do to show the bank that you are a good credit risk. Now, what they tell us is that if you are new to Canada, and you are, the minimum is typically 6 months to establish that credit. So if you are here for 6 months at a minimum, and you can put down at least 10%, the qualifications to show that you are a good credit risk are 6 months of a primary bank account through a Canadian financial institution, showing that you have handled that primary account well for 6 months. So typically what we do is most people coming into Canada, you're immediately set up with usually a bank account, and they try and get your credit rolling by starting you off with a credit card. What we're going to get is the bank account, your primary bank account, where your pay goes into and your day-to-day handling goes into. We're going to check that 6 months of the pay of the bank statements on that bank account to basically show that there are no missed payments, there's no credit issues, there's no issues with money or delinquencies or things like that. As long as it's well handled for 6 months, you have the 10% down payment, and you've been in Canada for that 6 months, that will qualify you on the credit side for that new to Canada program. So realistically, pretty light. Even not having much of a credit bureau or any credit bureau, you're going to be able to qualify just based on bank statements if you handle those well and a 6 month time frame with a 10% down payment. Now, one step further on that, if you might maybe only have, say, I don't have the 10%, Ryan, I've only got the 5% standard. What they typically do with that situation is they say, well, we do want to show some credit strength. So because you only have the 5% down payment, we do want a little bit more time to show. So they usually ask for 12 months of being able to show that there is some credit strength for that borrower. But they give us a few more options on what we can show them. So instead of showing bank statements for the 12 months, what they ask for is confirmation that your rent has been paid on time. So typically people are renting here. What they ask for is a letter from your landlord and the bank statements to show that you've made your rent on time for 12 months. And they ask for one other supplementary addition to that, that we do show them 12 months of any standard bills. So any standard payment that can be a Sask energy bill, or a Shaw cable bill where you get your internet or your TV from, or a power bill where you get your SAS power, or if you have a car and you pay your plates every month. 12 months of showing your plate payment is made on time. Anything that we can show a structured payment made for 12 months is the addition to the rent. So 12 months worth of rent confirmation and 12 months of any other structured payment works great with a 5% down payment. So those are kind of the two options. 5%, we need the 12 months of the rent and the other payments. And if you happen to bump that up to a 10% down payment, we just need the 6 months bank statement. So that kind of covers off the credit requirement for the New to Canada program. Now, of course, Andy mentioned 3 pillars, and we do want to make sure that we're covering that last pillar as well. So if you remember, we've covered income, we've covered the credit side. That last pillar that we do need to cover to make sure that that mortgage is going to go through is the down payment portion. Okay. Now, again, as I mentioned, if you've been here less than 12 months, so that 6 to 12 month span, we do have to have that 10% down payment. We kind of covered the credit side on that, but anywhere in that 6 to 12 month range, we do need that 10% down payment. If you happen to be in Canada over the 12 months, we can go back to a standard. Standard down payment in Canada is 5%. So you can go back to that standard down payment of 5%. We just need to show that 12 months of history with the rent and the other structured bills. So those are the two kind of tiers with that down payment side, is 5% if you're here over a year, over 12 months. And if you're here that 6 to 12 month span, we do need 10% down. Those are kind of the minimums that we do need to play with. And he covered a little bit of the down payment sources that we can use. Of course, those being savings. If you have savings in your Canadian account, one thing we do typically see a lot of is people bringing funds over with them from their country of origin. That's fine. we do typically need to see them, as Andy mentioned, landing in your Canadian account and sitting there for 90 days. We always want to make sure that we do have that structure of that sitting in a Canadian account. We do have regulations and laws on, they're called anti-money laundering regulations, that they do want to make sure that any funds coming in from another country do go through those anti-money laundering regulations, and they do have to sit there typically for that 90-day period. Now, the other one that you may not have thought of, RSPs are a great one if you do have those set up early in Canada. Most people don't at that point, but that is an option. The big thing is, if you're bringing funds over from your country of origin, make sure that you keep the track records of the transfer of funds. So, for example, if you're moving funds over from another country, keep your transfers, your wire transfers of moving funds from your country of origin into your Canadian account. We are going to want to track that money. Okay. Now, the other one that you may not have thought of is that is allowable also under the New to Canada program is if you do have an immediate family member who wants to gift that money to you as part of the down payment. Now, what we mean by immediate family member is a mother or father, a sibling, so a brother or sister, a grandparent, so grandma and grandpa, and or anybody that is a legal guardian can also factor in as an immediate family member. The ones that don't are that step removed from the immediate family. So aunts and uncles, bosses, friends, even if they're a good friend, it still doesn't qualify. It does have to be an immediate family member. So know that that is going to be mother, father, grandparent, or child that those funds can come from. Now, what we're going to do with that is, as long as they are willing to sign a gift letter that states that the funds are non-repayable as a gift, and coming directly to you, we will show confirmation of the funds going to your bank account from your gifter, and that qualifies you immediately as part of the down payment as well. So it's called a gifted down payment from immediate family, and that also qualifies for your down payment. So if you may not have all the down payment yourself, ask family if that's an option for you. Check with mom and dad, check with a sibling. If you're coming over, you're maybe a little bit older and have children that could afford that, that's an option for you as well. Grandparents also factor in there if they're willing to gift part of that down payment for you as well. That also qualifies as a traditional down payment. So some great options there as well. Again, big thing, really, the bank is going to want to have a 90-day look at your bank account to make sure that the funds are in your bank account for the 90 days, just to make sure that you haven't borrowed it off a loan or you've taken it in from a source that can't be tracked. So that's kind of why the 90-day track. They want to make sure that they have looked at, make sure that you've had those funds in there for a long amount of time and that you haven't just brought that in quickly. So the 90-day check on it, really, really important. Now, again, keep in mind every situation is so unique to you and your family. This is just the high level version of the program. Please reach out. We can have a one-on-one conversation with Andy and you and myself, and go through your specific situations to make sure that we really narrow down the three pillars: the income, the down payment, and the credit, to make sure that we understand where all the money's coming from, where the income is coming from, and get that pre-approval all done up for you. We look forward to talking and guiding you all the way through. And if you do have any questions, keep those rolling in the chat box. Yeah, great program. Really there to help anybody that is fairly new to the country. But we look forward to helping you out. All right, Andy, I'll flip her back over to you to keep rolling.
Awesome. Thanks again for all that. I've been answering some questions in the chat. A lot of them are in your department, so I did what I could, but you may want to go check my answers here. I know one of them
That sounds great. I'll kind of go
yeah.
through it on my side, and if there is anything to add, I mean, Andy's a brilliant man, and I'm sure these are right on. If there is anything to add, I will just kind of add that in the chat box as well.
Awesome. Okay, we'll keep this rolling. I've had this question come up a few times now, and that is it better to go through a bank or through a mortgage broker like Ryan? And this is where we talk about it. So, first disclaimer on this. Okay, I've had it before. I've had people that work at banks come up to me and say, Andy, we like this. We're not okay with this part though. And again, this is not a bash at banks at all means. Okay. I have no issues with any of the banks. the thing that I've worked with when I'm doing this, there's a reason I work with Ryan. Okay. I don't get kickbacks from Ryan or the lenders or anything like that. I work with him because he treats the people that I work with amazing. He knows what he's doing. He gets the best rates and best programs. Again, I'm not bashing banks, but this is my professional opinion, and this is from dealing with some of the banks. Okay. Uh, I've had actually it happened in December. I had a new to Canada. They were from Nigeria. They were using a bank, and I'm not going to say which bank, okay? But they are using a bank. They approved everything. We wrote an offer on a house, very nice house in Stonebridge. Went through the whole process, did the home inspection on the very last day. They said they can't approve the mortgage anymore. Sorry, nothing we can do. And they passed it off. They passed it off in-house, whatever. So I was like, Ryan, we got to fix this. So handed it off to Ryan, who is a mortgage broker, not at the big bank, and he was able to fix it. And we are right now working on the process as we speak. And things are looking amazing. So the bank just did not do their job correctly. And honestly, this isn't the first time that's happened. It's not very often, but every now and then somebody will use their bank because they say, Andy, our bank is great. We love them. They do so well with us. And then they crash a deal and they no longer are a fan of their bank. Okay. So I just like to avoid it at all costs. If you go to your bank or have already done so, that's okay. Bring it to us. We are happy to show you how we can beat their rate and their program and why it's such a better option. Okay. Again, if anybody's on here working for a bank, I'm not bashing your bank. It's just what's running to my situation. Okay. But why? What's the difference here? So Ryan has access to 30 different lenders' products or over 30 different lenders' products. Okay. If you say you like RBC or Scotiabank or CIBC or whatever, Ryan can work with those banks too. If you really like them that much, he can work with them. But the nice thing is, he's going to shop it around. Maybe TD has a better program. Maybe RBC has a better program. Maybe this lender, I know one, First National is a really good one. They have a better program and a cheaper rate. So I'm going to get you a better program with a cheaper rate, saves you money. That's the goal. Okay. The bank you go to is restricted to their one product. Like I said, RBC, CIBC, they all have their own one product they sell you. We want to shop it around, save you some money. He works the same hours as I do. So real estate is evenings and weekends. People are looking at houses after they're done work. Okay. Banks close after hours. If I need a question from Ryan, especially in this volatile market where it's low inventory and we need a question now while we're competing with other offers, he's going to answer me. He always has, he always will. That's not going to change. Banks, again, when I'm working with them, if I can even get them on the phone during the day, I'll never get a hold of them in the evening. And if I'm lucky, I might hear an email back from them in a day or two. That is not helpful when we're trying to write an offer at the moment. Okay. Ryan, like I said, is going to offer you the best rate up front, the lowest rate with the best program he can get you. Where the banks are going to offer their posted rates and you may need to negotiate a better rate. Ryan's just going to do that for you. Okay. We don't need to worry about you doing it. We'll do it for you. Ryan, again, works for you and your best interest, right? He doesn't work for a bank. He doesn't work for the lenders. He works as a mortgage broker for you. Okay. I've heard taglines of mortgage brokers. We work for you, not the lenders. And it's 100% true. Okay. A personal broker at the bank, they do kind of work for you for your mortgage, but they also have to still make sure their employer's happy. Okay, so it's kind of a little bit on both sides. And like I said, you can call or text anytime with any question and harder to get a hold of. Now, that's kind of what I dealt with banks. I've had almost 2 or 3 deals that have crashed and lost their homes because of the bank not doing their job correctly. I don't know if it's just training or the people or what, but also it goes kind of both ways. It's not just any mortgage broker. Now, I worked with many mortgage brokers in my time doing this. Ryan has done majority of my deals for me, right? And that's why I always send him right away. That's my guy because I know he works well. Ryan and I had a buyer last year, about December in 2023, actually. He had a mortgage broker that worked out in Ontario. That's because he was referred to it. Me and this guy wrote 3 offers on 3 different properties, and that mortgage broker in Ontario had no idea what Saskatchewan is or even where it is, and crashed all those deals because they didn't understand the market in Saskatoon. I was done with it. I said, man, you have to talk to Ryan. So we got him to talk to Ryan. Ryan had his pre-approval done in a day, if that. And the first property we offered on with Ryan, we got it, we sold it, and they're in that property and they love the place. Okay, so again, it's not just a mortgage broker, it's the mortgage broker. Okay, you got to have one that does it. That's why I work with Ryan. We've been doing this for years, and there's a reason why. Okay, so those are kind of the reasons why. Again, not bashing banks, but I've had not very good experiences with them more often than not. Okay. Also, I had somebody ask before if you want to pay out your mortgage or if you break your mortgage. And now breaking your mortgage means, like Ryan said, 25, 30-year mortgage. Most people don't live in their first home for their whole life. Okay, they don't. It's a simple fact. And so when you're breaking a mortgage, whether you're upsizing, downsizing, moving to a different province or country or city, you have to break the mortgage. And there can be penalties to do so. Ryan makes sure to have little or no payout penalties while you do so. Bigger banks tend to have bigger penalties for that. Okay. So again, we're all about saving you money. Okay. We want to protect you, make sure your investment's sound, and that if you do need to move or whatever, that you're not going to get penalized for it, either majorly or not. Okay. So that's the kind of idea of why it's better. So, we're about 5 minutes to 8. We're going to be running a little bit over here, but I'm going to this is it for, the mortgage side, the financing side. I know it was a lot of information. Book that call with us. We're happy to help work with you, see how it can help you further. I am going to jump into a couple tidbits on real estate, and we'll try to get you out of here. It'll be before 8:30, I can tell you that. It might be quarter after 8, but we'll try and get you out of here. So, okay, this has come up a lot in real estate is buying new builds now because of the low inventory market. So I want to touch a little bit on this. I don't touch a lot on this because there's so much that goes into buying from a new build, but just a couple things and I say it's a mistake from going directly to the builder. Why? Because there's many builders in Saskatoon. I've dealt with many builders in Saskatoon. I know which ones are good builders, which ones offer what, which ones do this for you, which ones include this. And I take you to different builds. I show you different options, and I base those against resale homes, so you know you're getting the right fit if that's what you want to do, right? If you go straight to the builder, you're just going to get their one product and that's it. We're going to shop it around, okay? Also, I'm a neutral party. I work for you, not the builder. So I'm going to make sure that if we can negotiate stuff into it, I will. And now new builds typically don't like to touch their purchase price. They have their set pricing. That's it. So instead of negotiating prices, I'm going to negotiate add-ons or upgrades. Okay. The last one I did in November was for an Ehrenberg build. It was a nice house. It didn't come with appliances or an air conditioner. So I took that and I said, well, work with us here. We want it, but we got to work a little bit here. So the price of the air conditioner and the appliance package for the whole house came to about 16 or $17,000. I got them in for about 8,500 bucks, so almost half off. So one of them was pretty much free to put in. They're not always going to throw things in for free, but I can negotiate some of those in. I've negotiated back decks being put in, right? Things like that. So that's kind of an option when it comes to builders. Plus, I've had people say, well, is it any cheaper to go directly to the builder? And no, the prices are what they are. But you want somebody who's going to negotiate for you. And if something goes wrong, you want somebody that's going to help you against the builder because builders are human too. They're putting these houses up at a fast pace. Things get missed. So you need somebody who's going to help you get it fixed properly and not to have to fight so much with them. Okay. That's what the big thing is with this. So let me help you shop around, find you the good builders, find you a good deal, show you what options are in each build, and go from there if that's a way to go. The next thing I want to talk about really quickly is very, very important when buying a house. I talked about this earlier, but it's very important whether you're buying a brand new house or a resale house is a home inspection. I have done this for 4 years. I have yet to write an offer where they didn't get a home inspection just because it's that important. And if you choose not to get a home inspection, I make sure I get that in writing that I stated you should get it, but you chose not to just because there's so much liability with this that I have to cover my end, okay? I see this chat is firing up still, but I'm going to throw more out there for you guys. Just off the top of your head, the people that are still with me here, can anybody answer or know how much a home inspection for just a simple detached house is? Just throw some numbers out there. I want to see if we're close or not, just to give me an idea. Oh, I wish. Oh, dude, I wish $200 would be amazing, but yeah, I shouldn't say it like that. It sounds so bad, but 200, yeah, if you can find a home inspection for $200, I'd run away. $1,000, no, not nearly that much. Whew, yeah, there you go. 500 to 600 is close. It's under $500. Okay, it's about 475 is what my guy typically charges, and that's pretty close to everybody. I haven't found many people that are cheaper than him. It's mostly over that. But my guy does fantastic work. So it's 475, and I've had people say, well, that's kind of a little expensive. And I kind of agree in a sense. In a sense, it sounds expensive, but when you're buying a $400,000 property, $500 to get you a massive, massive book of information on this home you're buying it's worth every single penny. So my guy not only inspects the entire house from roof to foundation and everything around it and inside, he also gives you maintenance tips to keep your home running smoothly, what to look for, and also tells us if there's any issues that need to be addressed now or maybe later in the future, but he does it in a way where he doesn't make it scary. He says this is just part of owning a home. It's just like buying a car. You got to maintain it, make sure it runs properly. And again, if anything goes wrong with the house, you call me, I let you know. Maybe I can diagnose it for you because I've owned homes for many years, right? Or I know who to call to help you out, okay, to save you some money instead of not sure what to do. Okay, so inspection, how does it work? So with a home inspection, they can't be invasive, which means they can't open up walls to look behind there. But what they have is, as you see on the left, infrared cameras, and they've got thermal imaging cameras, I guess, to show you. He's looking for any spots in the walls and ceilings and attic and things like that. If there's any insulation missing, any cold spots, any damp spots, right? He's got moisture meters to see if there's any water issues coming in. So instead of opening the walls, he can find it with these things. But above that, he also inspects all the electrical because that's a major thing with your home. Checks to make sure there's no issues with the breakers, any power that's going through the whole house to start fires. Checks all that for you. At the bottom, I know it's harder to see, but he's checking every piece of plumbing. So if there's water flowing through it, he's going to test it for leaks, right? Sometimes he's found leaks and it's a 50-cent part to fix. Sometimes it's bigger leaks that need more addressing. Okay. He also checks, of course, the furnace. Now we're in Saskatchewan. A couple days ago or 2 days ago, we had that super, super cold day. We want to make sure these furnaces are running smoothly for you to last these Saskatchewan winters. So he opens them up, he checks them, but it also is what your AC runs through. So in the summertime, we want to make sure that's all running smoothly as well. So he tests that. Then he tests every appliance in the house to make sure it's functioning properly, not leaking if it's a washer or a dishwasher, right? Checks all that. He'll check the roof. He'll check every window. He'll check every plug in the house. Like it takes him hours to do this, but it tells you everything. He'll test the garage if there's one. It's crazy. And I'm talking, there's like 50 pages of information here. So mind blowing how much they find. Now, it's not meant to scare you. It's just meant to show you. And most of the stuff is in there is just maintenance stuff. But for me as a realtor and for you as a buyer, we want to know, is there major issues, right? That's what we're here for, to make sure the house you're buying doesn't have major issues. Now, with home inspections, it's a condition to buying a home, and a condition means it has to be satisfied for you to proceed with the sale. If you're not satisfied, you have a couple options here, okay? Number one, if it's a terrible home inspection, you can simply just choose to walk away from the home and we'll go find you a better one. But I have yet to buy a home that we walked away because of a home inspection. Honestly, I haven't. I haven't yet. We usually look for those issues before we put the offer in, okay? But usually what happens if they find some major deficiencies, we can either A, we'll negotiate the sellers to fix it, providing proof that was professionally fixed before possession day, or we'll ask for some money off the purchase price so you can deal with it when you move in and have your own trusted people fix it. And that's kind of the three different ways. So either you walk away, you get negotiated the purchase price, or negotiate them to fix it, okay? Usually it's meant for major things like an issue with the furnace, issue with plumbing, electrical. If your plug-in over in the living room isn't working, well, I mean, that's a $10 fix. We're not going to worry too much on that, but I've had it where the furnace wasn't working properly or the electrical had some issues with it or plumbing issues, right? So we make sure those are kind of rectified before possession date. So again, if you skip this, if you choose not to get this and you move into the home and you find some major issues, there is no fallback. right? If you find out your roof is leaking and it's causing mold, or there's an infestation of pests in the wall, right? Things like that, you're not covered. And stuff to fix, like major stuff like roof leaks, you can be upwards of $10,000-$20,000, depends on the damage to it. So again, $500 is really nothing compared to what could be, especially a cracked foundation. Foundations are not cheap to fix at all. And so we want to make sure that there's no issues that way. Okay. So very, very important. Okay. Actually, I'm doing a little bit better than I thought on time. But anyways, that covers a bit of home inspection. So very important to get this done. Even new builds. I've recommended it for people that bought a brand new home, even though you get the 1 year full warranty on it. I've had home inspections on new builds and my guy finds stuff. And then you can take it, you can take the whole inspection, send it off to the builders and say, hey, this is what he found. You guys get over here, you fix it. Because this is warranty, you fix it. That new build from Ehrenberg, again, I don't like to use the name Ehrenberg. It's not the builder at all. Trust me, it's not the builder, okay? They use third party like electricians and HVAC guys and things like that. So the people they hired to do the furnace, they installed the furnace, but there was an issue with it. It was having an issue keeping up in the house, and they weren't wondering why. So instead of, and the builders kept saying, or not the builders, but the techs kept saying, nope, there's no problem with it, it's fine. But it wasn't heating up the house. It's a brand new house. So I told him, you need to call my guy, my HVAC guy. So he called my guy. My guy went over there. He opened the furnace up and he found out that it's a stage 2 furnace, which means it was only running on one stage and it didn't set properly to run on the second stage. So it was running at half capacity. If we never got him in there to look at it, that furnace could have been running at half capacity for a long time and burnt it out. Okay, so again, people are human. They make mistakes. Get it checked by a home inspector. $500 is worth every penny. Okay. Okay. One more little bit here, and then we're gonna jump into some Q&A here, and I'll get you guys out of here. But I got to talk about condos because condos are very, very popular these days. They're more affordable, right? So in the offer to purchase, this is mandatory that the sellers give you a copy of the condo documents to review. They're called an estoppel. Okay. Now, it is very important to read it because it has everything about the condo. It tells you how it's ran, who's running it, how much they have in the reserve fund, the maintenance fund, how much your condo fees are, how much part of your condo fee goes to what needs to be fixed, what's been fixed, the general meetings, have they been audited correctly, have they done correct reserve fund studies? So many different things go into this. And I've had it before where a lawyer has told me, do not buy this property because this is a terrible run corporation and they are gonna, it's awful. So walk away, and we've done it. And so that's the one thing that isn't mandatory, but should be, I feel. You are going to have to pay a lawyer, sorry, to get them to finish the transaction. So they put the title in your name, do the mortgage processing, all that. You have to pay them with closing costs. Get them to review this during the process. It is so important. I work with a fantastic lawyer. I think she said she might be on a call with us today. I don't know if she is or not. If she is, Kemi, if you're on here, I work with Kemi a lot. She is amazing at what she does. She is a great lawyer, and she will review the estoppel for you, make sure there's no issues with it. And if there is, she'll let you know. But really, as long as you use a lawyer to review it, it's important. Okay. They'll tell you how it's run. They'll make sure that everything's on track and there's no issues. They'll tell you if the reserve fund is solid or not, things like that, right? And so the reserve fund, the reason why I mentioned it a few times, it's the most important thing. The reserve fund is how much money a condo has saved up to fix things that eventually go, right? So if they don't have a proper reserve fund, if they're insufficient with it majorly, and there's a big issue or something they have to fix, they could do what's called a cash call, which they come to every unit owner and ask you to pay a sum of money to help fix it. That's over and above the condo fees you're already paying for. And that could be anywhere from a couple $100s to a couple $1,000, right? So we want to make sure you don't have that coming at you because of a poorly managed condo corporation. Okay, it's very, very important. But another thing that's important is it tells you not only who the insurance is through and the maintenance and all that, it tells you the bylaws of the condo, what you can and can't do. And the reason why that's important is because some condos have bylaws on renovations, right? So just for example, an apartment style condo could have a bylaw in there stating you cannot remove carpet from the main living area because that carpet acts as a sound barrier from walking for the people underneath you. If you rip the carpet out and put laminate, it creates a lot more noise for the people below you. So they put a byline saying you can't do that. But if you didn't know that, you go in, rip all the flooring out, put laminate in, pay for that to be done. Well, then you may get complaints. You might get fined, and then they'll tell you to rip it out and put it back in. So now you're paying double to do flooring. Okay. So again, we're here to save you money. Very important when you're buying a condo, get this reviewed by a lawyer. Again, if Kemi's on here, great. I recommend Kemi a lot all the time. But there's also other lawyers out there that I would recommend too if you want different quotes and things like that. But it's very, very, very important. Okay. So get it done if we're buying a condo. Again, it can save you thousands of dollars if there's cash calls or poorly managed condo or bylaws in place and things like that. So, okay. Makes sense? Hopefully. Oh, okay. So another time I'm going to throw it in here. Booking link. Book a call with us. I appreciate everybody that's booked so far. Like I said, lots of information. I'm sorry if your heads are hurting, but I hope. Remember that slide from the start? Oh, hang on. Remember that slide from the start? I hope that we at least helped a little bit of this to give you an idea of how to get into the market, that you have people on your side to help you. Trust me, there's a lot of stuff that protects buyers when it comes to buying a home. I will utilize all of it to protect you, right? That's the idea. Save you money as much as we can during the whole process and to save you from headaches. That is the goal here. So again, thank you guys for sticking around this long. I appreciate everybody for being here. Book a call with us if you want to learn more about any of this, whether it's mortgage, whether it's buying process. Aha, I seen that question. That always comes up every now and then. How much is your fees? Great question. Now, when it comes to buying a house in Saskatchewan, I guess really all of Canada, to be honest with you right now, you do not pay realtor fees when buying a property. Okay? In a roundabout way, like out of pocket, no, you don't. In a roundabout way, kind of, but I'll explain. When it comes to buying real estate, when you go to sell your home, if you say, Andy, I'm ready to sell my home, I come over, we do the process. That is where I charge a commission to sell your home. Okay? But without a buyer with the money to buy the home, the commissions don't get paid. So in a roundabout way, both the seller and buyer are paying for it. But out of pocket, you aren't paying for any fees, right? Same, I know Ryan can explain this really well for his side too, but you don't pay Ryan any fees out of pocket up front with him or anything like that. So all you need to buy a home is you have to have your down payment, closing costs, and any inspections you want to get done. Okay, so no fees from us. All right, makes sense. The only time I've ever, and I've never had to do it yet, but the only time I've ever came close to charging a fee to a buyer to buy a house is when it's an off-market property. So it's not listed on the MLS. It's a private deal. I can help with private deals. And what I do is I negotiate the sellers to pay a commission to me. But we've run into every now and then a seller will be very stubborn and not want to pay it. That is when we have the conversation saying you need representation. This is how much you'd have to cover. There's ways I can put it into the purchase price, right? But I've yet to actually have to do that. I've always negotiated the sellers to do that. So hopefully that helps. So hopefully this helped you guys out. I hope we gave you lots of good information. When you book a call with us, this is how it comes up. Comes up to a calendar, shows you a different day and time, whatever. Pick one that works for both of us, and then we'll have a good conversation. I see, so there's some great questions coming in. I know I just mentioned closing costs, so I kind of figured this question would come up too. So for closing costs, I typically don't, I'm just going to move to it now anyways. This is where we're in the Q&A session. So I'm going to answer this one for now. Then we'll go make sure we didn't miss anything. Closing costs, very important too. This also factors into your mortgage approval as well. So closing costs, we typically say is 1.5% of the purchase price. So when we say you need 5% of a down payment, that is true, but kind of treat it like you need 6.5%. Okay. Closing costs will cover any mortgage processing fees, lawyer fees, things like that. So 1.5%, right? So that's just the thing to keep in mind. So but usually it's not quite 1.5%. It's usually lower, but we like to hit that higher buffer just to make sure you have it instead of not having it. Okay. Oh, hopefully that helps. Hopefully, again, thanks guys. I have talked for most of this, so I'm going to let Ryan kind of jump back in here and we'll see if there's this is a time for everybody. You know, keep throwing questions out there. We will stick around for as long as you want. Um, Ask questions if you want different ideas on different things. Throw it out here, and we're happy to answer it. This is a time we're just going to kick back and chill and talk. So go ahead, and Ryan, feel free to jump back in. Maybe still here, Ryan?
Oh, I'll get
There
myself
you
on
are.
mute there. My apologies, guys.
All good.
This has been one of the most engaged groups that we've had, literally in the 2+ years that we've been doing this. I've been typing steady for
Yes.
pretty much the hour, and there's still 16 questions we haven't got to. So that
Oh
that is
God.
fantastic.
Okay.
Big praise to you guys for keeping us moving. Some absolutely fantastic questions. So what I'm going to do here, I'm going to actually just start talking about these. I've got typed up to Neil just asked a question on credit scores and statement histories. I've answered that one, but I'll kind of just read the question and then talk about it here going forward. And keep those coming. We are going to be on here for another probably 15-20 minutes if you want to kind of hang out with us. So we'll just kind of start going through them and answer them in verbal form if you're okay with that. So I got a great question here from Diana. What if you're getting a settlement, but the money is being transferred from Canada, then transferred from your reserve band, and then you want to purchase a home in full payout, if that makes sense? Okay, so what I'm kind of thinking is that you're not really needing a mortgage, or you're going to get it and then pay it out very quickly. So I'll talk about each of those in two separate kind of scenarios. So settlement coming from a reserve or a band, I mean that happens actually quite a bit. So lots of times there are funds that are given out to band members from the reserve or from the native band, for lots of things. Sometimes they're mineral rights, sometimes they're just standard payments per month, things like that. That those funds can absolutely be used not only for down payment. So as long as we can verify, from a letter from the band that states that those funds are from there for whatever it was, if it was mineral rights or whatever that was. And then showing the funds going into your account. Not only can we use that for down payment, that would be great. We would look at your account for the standard 90 days to make sure and validate the source of those funds. So that can be used there. Kind of the back half of that question, Diana, is if you wanted to pay it out fully. Now, what we would do then is we would want to set you up with a mortgage that had minimal prepayment penalties for breaking your term, or set it up on a very short term mortgage to ensure that paying off when you pay off your mortgage in full before a term is up. So when you would set a rate for either a 3 or a 5 year term, a fixed or a variable rate. If you break that term, if you pay it off before that 3 or 5 years is up, there's penalties to do that. So we would want to really navigate and find out when you would expect that full payment to come, and set it up so that we minimized any penalty that you would pay. And realistically, receiving money from the band to pay off the mortgage, you could do that anyway, but we would want to make sure that the penalties were minimized on anything after possession. But money coming from a band for down payment, we would want to validate the source of that and show the money going into your account to be able to use it just for the down payment. So hopefully that answered both kind of sides of that question there. Lots of questions around rates. So, I mean, really, I do kind of want to talk a little bit specifically about rates. Everybody says, what's your best rate? Rates are very dependent on a bunch of different factors. So we don't just quote a rate and say everybody gets X rate. Rates are really dependent on the three pillars that we talked about. What's your credit like? Is your credit good? That's going to depend on your rate. How much you're putting down. Are you less than 20%, but you have, so that would be a CMHC insured mortgage. The bank has the best coverage with CMHC insured mortgages and typically offer the best rates on those mortgages because they are covered on the backside should, anything happen to the mortgage payments, and if there were issues with the mortgage payments. More than 20% down payment, the bank doesn't have that CMHC coverage. Approvals are absolutely still easy to get on that, but they do change the rates a little bit. Sometimes there's a little bit of a premium on those because the bank doesn't have the coverage of CMHC on the other side. And other factors would be, are you looking at what sort of a length of term? Anywhere 1, 2, 3, 4, 5. The popular ones are 3 and 5 years. Typically, they're the best rate options. Are you looking at fixed or variable? So as you can see, there's lots of different options there, that we can't just quote a rate because it really depends on what you're looking for in the best situation. So really what we recommend, let's have a chat. Let's kind of go through the process, start the application, and then find out really about what you're looking for length of term and all those other factors, fixed or variable. And then we can get you that rate once we know what kind of a mortgage you're looking for. Okay, keep going. Great question from
Lots are
Rana.
popping
What is the
up, eh?
Yeah, oh, there. This is great, guys. What is the policy and process to buy the land and get it built yourself? Okay, so mortgages, residential mortgages in Canada, we can only lend on something that has a property on it. So that would either be a brand new build that's got a house built on it. We don't do mortgages through our residential channels for just land. If you were looking for a land loan, what I recommend is reaching out to a bank branch. Typically, they do it through their commercial side. And typically, they usually ask for 25 or 35% down. So, different channels just to buy a piece of land. If you're looking at doing a self build, again, these are very specific situations. They're tougher to do because every bank wants to know that if you're building your house, that you're qualified to do that, right? That you're either a general contractor or that you're somewhere in the construction phase. There are certain processes to do that. They don't offer self-build mortgages through the broker channel, so you would have to reach out to a bank branch directly to get that done. They can be done. They're very tough, and they're going to want to know that you have the qualifications to really build your own home or act as your own general contractor. They can be done, but they're a little tougher to go through. So hopefully that answers both the land and the self build questions for you, Rana. But great question there as well. Uh, Great question here from Mez. Could you please tell above what amount has to stay in the bank for the 90 days? So what the bank does with down payment is they do a look at 90 days. So they're going to ask for 3 months of your most recent bank statements, and they're going to go through that. Now, what they're looking for there is to ensure that the funds are generated from savings or a gift or the proper down payment channels. What they want to really guard against is that you haven't gone out a week ago and borrowed $50,000 on a personal loan that maybe not be on your credit bureau yet, that would affect your qualifications, or that it is coming from a source that is maybe not allowed. Maybe it's an illegal source or something like that. So they do always check the 90 days to ensure the validity of the source in there. It's not that the entire amount has to be in there for the full 90 days. That typically works best if it is. But if you are still, you're maybe, your down payment is $20,000, you've got $18,000 in there as of today, and you get paid 3 times by the time that we're going to write an offer. We would say, what, as long as you can show that the money's in there by our condition of financing date, that works too. So that doesn't always have to be fully 90 days in there, but we have to ensure that we do view the account for 90 days to make sure that all of the funds are from a proper source and properly checked. Hopefully that answers your question. Great question, Mez. Okay. Oli Wasami, great question. Can you put a light on eco-friendly home funds? I'm assuming you're meaning that if the property itself has green qualities, has eco-friendly qualities to it. What happens there typically is if there are funds that the property itself has a green rating or an eco rating, if there are energy rated windows and doors, proper green qualifications. It's actually called a green rebate program through CMHC. What happens is that if your home does meet a certain green rating or an eco rating, that there is refunds that can come with any CMHC premium that you would pay up to 25%. We would go through, typically, if you are buying a new home, we would want to have the home tested to find out what the green rating on it is, and get you the refund based on that. But that's kind of how that program works. It's not put a light on eco-friendly home funds. Hopefully that's kind of what you mean. I'm not sure what you do. If that didn't answer the question, if you can maybe clarify that in a statement for me. But hopefully that answered your question. Can we touch on fixed and variable rates? Absolutely. That's a hot button topic. I'm surprised that one hadn't come up before. So really fixed versus variable. We get a lot of questions on fixed versus variable. What the fixed rates are is you typically will set a term length. Usually 3 and 5 years are the most common. What that means is with a fixed rate over a term. So we'll say 5 year fixed. Your rate would be set and locked in for that full 5 years. So if rates went up, you would still be locked in. Unfortunately, if rates go down, you would still have that same locked in rate. So as rates are really kind of all over the place, we do see rates kind of dropping a little bit, and then Mr. Trump comes in, and we've seen an increase based on some factors that he is talking about with the economy. So the economy is in a very crazy state of flux right now. So having a fixed term with a fixed rate, you are going to know exactly what your rate is for the length of the term that you picked. So a 5 year fix, that rate would not change for the full 5 years. Once that 5 years is up, then you could switch that term to something else if you wanted to go into a variable at that time or a shorter term. Once that term is up, your mortgage will be open to pick another term, but you would be locked in to pay that standard rate for the length of the term that you picked. And if you do break that term by paying it out early in part or in full, there would be penalties applicable to do that. Typically, with fixed rates, it's either a 3 month interest penalty or what's called an interest rate differential, and that is the difference of the current market rate versus the mortgage rate that you had versus the time that you have left on the mortgage. The basically the bank is stating that you did sign a 5 year mortgage contract. They want their interest to be paid to the end of the term. That's kind of what it's getting at. That there is the interest on the term would be paid in full if you broke the term early. On a variable side, what the variable mortgage does is it's not fixed. It floats up and down with the economy's prime rate. Prime rate does kind of move up and down depending on how the Canadian economy is doing. We have seen historically low rates during the COVID years when the economy was doing very poorly. The Canadian government wanted to make sure that the mortgage market kept going, so they dropped the Bank of Canada rate. You probably are hearing a lot about that. The Bank of Canada rate, that affects the prime rate. So when the Bank of Canada rate goes down, the prime rate, the lending prime rate goes down, and that's what affects your variable rate mortgage. So when the Bank of Canada lowers rates, anything in a variable rate will go down. When the Bank of Canada raises their rates, that raises prime rate, and anything in a variable mortgage will go up. So it does fluctuate up and down with the economy. There typically is some risk to being in a variable mortgage because it does fluctuate. What we saw after COVID was rates went from, some people had, in the 2% range, which is historically low in Canada. We've never seen those, up over 6%. So people saw their mortgage rates triple because they were in a variable mortgage, and the economy skyrocketed after COVID, and rates almost tripled. So know that there is some inherent risk with a variable. If rates are kind of on the way down, there's some benefit to being in a variable, but that same benefit also comes with the same upside risk. If the economy does go up, then it will raise your rates. So lots of people, especially first-time homebuyers, really opt for the structure and the stability and the comfort of a fixed rate. But absolutely, if you're okay with a little bit of risk, and we have a good conversation on where we think the market is going and explain all those risks to you, a variable rate mortgage could be a great option if, if we capture a lot of great downside. If the Bank of Canada does continue to trend downward with rates, that could be a great benefit for you as well. But we'll go through. Let's really, that's a bigger conversation to have one-on-one. We recommend clicking that booking link, talking with us one-on-one, and we can go through your individual situation. But some great options. Hopefully that covered a little bit about the fixed and variable stuff for you. Cloud vistas. What do we got? Leakages that has to do with water is better discovered during winter. What happens if you buy a house in the summer and the problem shows up in the winter? I'll actually give this one over to Andy. This is kind of more on the timeline and what happens if there are issues after the fact. Lots of it. That's the reason why we go through and have these inspections done too. I'll flip that over to Andy, kind of handle that one for us.
Yeah, that's a good question, and it's tough. Like I said, home inspectors, I love them. They do a lot of good stuff. I mean, they obviously can't see absolutely everything because they can't be invasive. Now, when it comes to a leaking foundation, that's where it gets super tough, right? Chances are, if there has been a leak at some point, they would be able to discover it either through their moisture meter or something like that, even if it's been frozen, even if there was some sort, because in the basement, it's warm enough that you're going to see some, if it's even winter out, if it's minus 50, but you have a leaking foundation and it's warm in the basement, you're going to see some sort of moisture there. But it could be more predominant in the summer, but they'll be able to at least detect that part of it. But the downside to it is that, I mean, it's like buying any property, right? And I don't like to say it because it sounds bad, but you buy a property and things are fine. Home inspection came out great. Sellers had no idea, but maybe next summer, all of a sudden, now we're seeing a leak. Did the sellers know about it? Maybe not, right? It now comes down to, did they disclose it? Did they know about it? Is there a way we can prove they hid that fact, right? Things like that, but it does get trickier. It's kind of just a home inspection, depending on the house too, right? You could always get foundation inspections. We've never had to before, but if we look and like this looks like a bit of a bowing wall, maybe let's get an engineer in here, right? But it's tough, right? Just because we can't open up walls to physically see, but these guys that we hire do as absolutely as much as possible to find these things. But that's a good question. I know it's probably not the best answer to hear, but it's true when you're buying anything that's essentially resale, the used car, used houses, there are things that they may not even know about and it's discovered after the fact. But again, 4 years, knock on wood, so it doesn't happen. But 4 years of doing this, I haven't had any issues like that come up through using the proper home inspectors, right? That they find what they can. I haven't walked away from home inspections, but they've detected different things that we've been able to find. And we just go as much as we can. We do as much inspections as we can, but you're never going to find absolutely everything unless we dig down there, which we can't. So unfortunately, not always. But there are home inspectors have liabilities in place in case they miss something, right? So you can, if you want to take them for negligence, you can do that too. But again, I work with ones that know what they're doing and are properly trained and, things like that. So again, hopefully it answers it. No, it's not the best answer, but it's what we can do. What else?
And that's a great point, Andy. This is really about. I mean, that kind of it really illustrates the importance. I mean, we get asked a lot. Do you recommend the home inspector and is it worth it? I mean, it's situations like that we want to make sure that we give you, when you're buying a home, we give you the most information about that house that we can. And you get to, if there's cracks and stuff that we find, then we can go in through and say, is it a big issue? Is it fixable? Is it going to be a problem going forward? Based on as much information as we can get from the inspector and viewing the home and talking to the homeowner, really we want to make sure that we get as much of that information up front. And that's what the inspector does. He'll go through and do his best to find as many of those things as we can so that you have all the information up front to make a decision on whether you want to go forward or not, right? So that's kind of why that inspection is so important, because unfortunately, after the fact, we do have some limited things that if any that can be done after the fact. So that's why that stuff is so important up front. Okay, I think we answered the how much is your fee stuff. So yeah, great comment there. And we'll kind of reiterate that is there is no fees paid to Andy or I from you. His cost comes out of the sale. So the seller typically is responsible for that side. And my fees are actually paid by whatever lender we do decide to go to. So we'll go through, find all the best lender options for you. And whichever way we do decide to go, that commission is paid to me from them. So to really, there's no risk to having us as your team because there's no cost to you to do that. All we ask is that once we kind of do set up our connection and our partnership, that you do stick it out with us. We're doing our best to find you the best properties and the best mortgages and rates options out there. All we ask is that we do kind of keep that partnership going forward, and you don't shop us around. We're doing our best to really shop that mortgage for you. We don't want to get to the 11th hour and have that shopped around after we've done a bunch of work for you. So that's all that we ask, is that there is that connection and that partnership going all the way through, and that you trust us right to the end to get it completed for you after we've done our best to really get the best options for you there. We typically are never paid until that mortgage and that property close. So we're going to do a bunch of work up front for you on good faith. All we ask is that you do kind of stick it out with us all the way to the end. Next question from B-Day. What percentage of the down payment is the closing cost, or is it part of the down payment? Great question. The minimum down payment in Canada is 5%. So you do have to have that for the down payment on the property. The bank or lender will actually only lend you 95%. So you do have to have 5% of your own skin in the game from savings, RSPs, gift, or wherever. The closing cost is a separate entity. um, what that is the legal end. So that is to pay the lawyer for their time and to register the mortgage onto the title of the home. Okay, so that's kind of the legal work. That's what the closing costs really encompass, is the legal paperwork and the legal process for the lawyer to do the lawyer's time to do the work, and for the lawyer to register the mortgage on the title. That's kind of what the closing cost portion of it is. So they're two separate things. The closing costs are not part of the down payment, they are separate. So you need to have a minimum of your 5% down payment. And typically, depending on, most lawyers are pretty close in their costs, so they approximate 1.5% of the purchase price to have set aside for the closing costs. Usually they come in less than that. Really depends on what the individual lawyer charges. But usually 1.5% is a really close approximation. They're usually coming in just slightly under that. So hopefully that answered that question. Can I apply for a pre-approval mortgage with 3 months pay stubs and some cash deposits? Newcomer here in at Saskatoon, with a couple of thumbs up there. So though I'm guessing there's a few people that are wanting this question. So thank you so much, Richard. Really, yeah, absolutely. So if you are with a structured job, that it's a permanent full-time job, that you get guaranteed hours at your job at a certain pay rate, usually one or two pay stubs confirming that you do work those guaranteed hours at that certain rate. We will have you also get a letter of employment that validates all of your, when you started with your job, what position you hold, your pay rate, and that you are guaranteed, say, 40 hours a week. We'll get a letter from the employer that does also validate that with a pay stub or two. And that's typically all we need for the income side. As far as the cash deposits, what we would do again is really review your bank account for the 90 days to make sure that you do have the proper funds in that account for the 90 days. I did want to talk about one small way that you said that, and I mean, I just want to clarify this. You said cash deposits. Um, we cannot use cash that's sitting in a safe in your home or under your mattress as part of your down payment. Any cash that goes, it must go into your bank account. It must be deposited into your bank account. And those funds do have to sit there for the full 90 days. Okay. So any cash that goes in, that does have, all those funds have to sit there for the full 90 days. So if you do have cash that's hiding under your mattress or in a jar on the shelf or in a safe at home. Get that in the bank account now. All those funds will have to be in your bank account sitting there for the full 90 days before you can even write an offer. Okay, so it's not a possession that has to be in your account for the full 90 days before you're even in a position to write. So I just want to clarify the cash piece. Some people say cash and they just mean savings in the bank. That's all fine. I just wanted to talk specifically on the cash. If it's cash in hand, if you're holding $10,000 in bills in your hand or in a safe, get that in the bank because that has to be there for the full 90 days. Moving on here, a question from Mez about how much, above how much amount transferred from sibling has to be in a Canadian bank account for 90 days. That's really up to you. So you can use all of the down payment can come from a gift. That's fine. If you have savings of your own, that you want to use a portion of your savings and a portion of it coming from a gift from a sibling, that's fine. Usually anything coming from a sibling, we ask that it's sitting, it's deposited into your bank account for 30 days, and we will have that sibling sign a gift letter that confirms that it is a non-repayable gift and not a loan. Okay, so typically 30 days is about kind of what we're looking for there. So hopefully that answers your question there. Follow-up question from Cloud Vistas. In my case, it is my fund, and I could show evidence that I sent money to them from a Canadian bank account to another Canadian bank account. That's fine. The fact that it's gone from one Canadian bank to another Canadian bank, we would just show probably get 3 months history from both accounts to show that you started it in one account and then just moved it from another one. So that we would just likely get the 3 months bank statements, the 90 days from both accounts, showing that money started in one and just got transferred to another one. That's totally fine, absolutely fine. Question here from B-Day. If my spouse buys a home paying 5% down payment, can I also buy my own home paying 5% down payment? What is a good rate on a 5 year and what is a bad rate on a 5 year? So I'll kind of deal with that in a couple of different parts. 5% down payment in Canada can only be used on a home that you are owner occupying. It cannot be for a rental. So any rental properties in Canada, they cannot be CMHC insured. So you have to have a minimum of 20% down for any home that you are not living in. So, for example, if your spouse and you are each buying your own home, you would have to live separately. You wouldn't be living together. So I would assume that means that you're buying one to live in and one as a rental property. So the one that you're going to live in could be done at 5%. Anything that would be a rental would be done at 20%. So technically, if you were two separate people, you could use a 5% down payment as long as you weren't living together in the same one owner occupied house. So again, 5% is only for owner occupied properties. After your spouse, say, bought the first house at 5%, um, you would obviously be living in that house. So if you bought another home, that would likely be a rental property and you would need 20% down on that property. Unless you turned the first one into a rental, then you could buy the new one at 20% and both of you would have to move into the new property. Hopefully that clarified that. What is a good rate on 5 years and what is a bad rate on 5 years? Again, that really depends on a bunch of different factors. What we would want to do is review your credit, make sure that you qualify for prime stuff to start with. We want to see, are there certain options that you want on your mortgage? So are there certain lenders that we would want to go with? Right now we're seeing kind of stuff around the mid 4% range. So about 4.5 is a prime rate, but we do see specials come across our desk all the time from different lenders. So you might have a specific set of circumstances that you want to go to a certain lender, and that we would be obviously dependent on what that rate is. But yeah, so kind of right in that mid 4.5 range, somewhere in there, 4.4, 4.3, depending on the lender. That's kind of a really good 5 year fixed rate currently. Hopefully that gives you a little bit of guidance, but very dependent on a bunch of other factors. And of course, down payment. Want to make sure if you're putting down 5%, that's where your rates are going to be the best on any down payment under 20%. Awaji, great question. Does a pre-approval affect your credit score? I get this question a lot. People are really worried about any credit bureau checks substantially wrecking their credit score. Now, that is very a lot of people that used to be a little bit more of an issue than it is today. The algorithms that Equifax and TransUnion, the two credit bureaus, used to factor in inquiries and credit checks. They hurt your credit a lot more than they do today. What they've realized over, say, the last 10 years is that just because you're looking for different mortgages and you're having your credit checked, whether that honestly, the bank checks your credit for everything: credit cards, any loans, any lines of credit, a car loan. When you apply for a credit card, credit checks are done all the time on your credit. And the credit bureaus really realized that that was a huge part of our day-to-day life. Was there are credit checks done? And really, that's all it is a check. So they have changed the way that algorithm works. And honestly, a credit check, even a hard check, is very, very minimalistic on your score. So, for example, if you have a 700 credit score and you have, a few years worth of credit, all your payments are perfect. Even at the very worst, that credit score might drop a point or two down to say 698 or 699. Trust me, the very first month you go and make the payments on that credit card, your score goes back up well over 700. So please know that just because a credit check is done, it's very, very, very non-invasive to your credit score. Barely will barely make a dent, and really don't worry about the credit checks at all, super affecting your credit score. Now, at pre-approval stage, to get a full firm pre-approval, we absolutely do want to have a look at that credit. If you just want to kind of go through and say what I qualify for, there are ways that we can maybe postpone doing that credit check, but we always want to make sure that we let you know that that firm approval on the mortgage is going to be dependent on that score. So if that credit score, if we go and say, well, we didn't do a credit check and the pre-approval amount is, 290 or 390,000, you will write an offer. And when we check that credit score, which is required to get the firm approval, and your credit is terrible or low, that's an instant killer of the deal. So we always make sure that we want to check that credit so we know exactly what we're getting into. When we're writing a pre-approval, we want to make sure that we have gone over the income, the credit, and the down payment to make sure that you're sound. When you write that offer, we're very confident that we have a great option to get you an approval. That's kind of the point of it.
Cool. Well, I think
Okay, moving on.
we're kind of running on end. I think we got time for maybe one more. Hey, Ryan, what do you think?
Yeah, we're
Think we
we're
got
we're we're. I can try to whip through a few of these. Yeah, I'm new to immigrant status with PR, currently working. Yeah, okay, I think we answered that one. Buying land, I think we answered that one. Is there a difference between buying a home to buying an apartment?
got that one.
I think we talked about that one. Yeah, great.
I think we
Yeah,
just
I think Andy's kind of handled all the bottom ones here. Couple quick ones at the bottom. Will a sibling be required to get a bank statement? No, typically Cloud Vistas, as long as they can have the siblings sign the gift letter and show the funds going into your account. Typically, they don't check the bank statement of the sibling, but I have seen situations where they have asked for that on exception, depending on the file. As a rule, they don't, but I have seen one or two in my time that they have. So I'll never say never, but typically they don't. All they ask for is the gift letter and showing the funds going into your personal bank statement, into your personal bank account. What can one do to build a good credit score for our income? How do we predict affordability and percentage? So lots of things you can do to build your credit score. Number one, making sure all your payments are made on time. Don't ever let that payment go delinquent, even for a day. That will affect your credit score. Paying off your credit cards or lines of credit payments in full each month. Great way to build your credit score. Lots of people just go and get an additional card, maybe $1,000 Capital One card. They use it for gas and groceries, and then pay that off every month. That's a great way to go and get that score going up. Big thing is no missed payments. Keep your payments paying off as much as you can fully if you can do it. And the big thing, this is the biggest tip that I'll give you, and most people don't even realize this, how it affects your credit score, is keep the balance of your credit card or line of credit at under half maximum of the limit of your card. Usually the sweet spot is between 30 and 50. If there's anything over that, it actually starts to negatively affect your credit score. So, for example, if you have a $10,000 credit card and you're holding a $9,500 balance, that will actually negatively impact your credit score. But if you have a $10,000 credit card and you keep that balance at, say, 2,000 or 1,500, that shoots your score up as well. Don't let it go over, say, 30 or 40% of the balance to maximize how much each payment will keep your credit score going up, and to maximize it right out. Boom, just go and pay it off each month. That's the best way to keep it going up.
Perfect.
Perfect.
I think
Good.
that's awesome, guys. I think we kind of answered absolutely everything. Ryan, you did awesome with it. I think we're about ready to wrap it up. I just seen somebody ask, yeah, that first time home buyer incentive's gone now. It's been gone for quite a while. That's what the 30-year mortgage rates are here to help with. But yeah, I think we had a really, holy man, that's probably the longest we went on. This is crazy. So we are going to have to say goodbye, but we appreciate it. For everybody who's still on here and that has booked a call with us, I appreciate it. I can't wait to talk to you. Everybody else, I'll put it in here one more time, but you will be getting an email with this in it too. Book that call with us. Let us know how you can help, how we can help you more. And even just talk more about this. There's always going to be questions out there. We're happy to talk about it. We'll get you our numbers and things like that. Happy to help. So, again, thanks, Ryan, for being here, answering all these questions that we need. Always informative with you. Let us know how we can help, guys, and we appreciate it. And if anything, I hope you guys have a great evening and look forward to talking later.
Look forward to connecting with you guys and all and helping you through the process. That's what we're here for. Chat soon.
Awesome. Take care, everyone.